Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a part of the Inner Circle subscription service that I offer here at ClayTrader.com. So part of this service right there. We're going to be taking a look, like I said, at the weekly newsletter. A couple few disclosures up front. Am I trying to imply that every single alert that I send out is a epic success and money rains down from the sky? Absolutely not. Nobody is perfect. No one is perfect. In fact, I may be showing, spoiler alert, some alerts that didn't quite work out or didn't quite work out as much as would have liked. So my goal here is to keep it realistic and show that, yeah, losses happen, frustrating trades happen, but on the flip side of all that, winning trades also happen. And that's why risk management is so important, because you want to make sure that you keep your account in places where, yeah, losses happen, but when those winning trades do also happen, that those winning trades can take care of those losses. So want to just get that up front, and it really does a good job of illustrating why risk control, risk management is vital to trading success. And then also we are going to be going back to the week of August 12th. Clay, why are you going so far back? That's a valid question. Two reasons. First off, it's just a matter of giving everything enough time to play out so that we can see what's actually happened. And then second, it's a matter of being fair. Given this is a paid for service, the last thing I would want is for somebody to pay for something and then all of a sudden see what they paid for out online for free. I'm sure you can see how that doesn't quite, how that would be a little frustrating for people. Now, if you are not aware, just a few days ago, the Fed cut the interest rates again, which means these numbers are going to keep going down, these numbers being what you could get at your local bank. And I like to do this every now and then just to keep things in perspective, but more so at this point, given, like I said, the Fed literally a few days ago, what was that, on Wednesday, cut the rates. So these numbers here that you see are going to continue to be going down, but we'll take them as is right now. So just keep in mind that, for 1 year, as far as a bank CD is concerned, 1 year, looking like the top rates out there is 2.45%, but let's just round that up to 2.5%. So just keep that in mind. 2.5% for 1 year of time, is another choice out there if you were to go and do a CD. So 2.5%, 1 year. I do want to offer up a couple more answers to questions I get all the time if I don't answer them in the video. First one being, hey Clay, what price range do you cover in this newsletter? I cover all price ranges. I don't really care about price. I care about probabilities, odds of success. So that's what I focus on, not just price alone. And as you'll see, prices will be all across the board here. And then second off, when are these sent out? These are sent out on Saturdays over the weekend. So it's not like you get a text alert in the middle of the day and you have to act super fast. You have plenty of time to look things over and make decisions. So that is how this all works. So the first alert we're going to look at here is CTST, and put this in the pattern back test. There's a big surge here. So the question became, was there going to be some sort of move back to that 250 area? So let's see how this played out. Now, this one ultimately turned out to be a no play. Why do I say that? Well, this one was kind enough to at least let everybody know right away on Monday morning that this thing was just going to be a total false move. What gave it away that this big move was a false move? Well, on Monday, the price literally gapped all the way down and opened up at 225. So 25% below where we even looking to originally get on. So I'm going to think that it closed at 315, but then opened up at 225. One of those where, like I said, I consider this a no play because with the gap down and seeing the gap down well below even that level of support, then yeah, that was a pretty in your face situation where it's like, okay, well, that was a strong move on Friday, sure, but wow, it seems as though all the momentum ran out, and sure enough, it had run out and back down it went. So this is one of these where things were looking promising, but because of that gap down, just made things apparently that, things had changed. So one of these where, I'm not going to call it a winning trade, of course. I'm not going to call it a losing trade though either, because it would have been one where just stay away from it because that big old huge gap down was a big leading indicator. Next one to keep an eye on was ARKAY, and again, call this, in the pullback category. So pretty similar to the previous one, huge volume, and then just wondering, that was really big volume. Is this going to at least pull back and then make another move back to the upside? So let's see how this played out. And the funny thing here is the exact opposite happened. Not only did this thing not pull back, it actually gapped upwards. And then after that, just kept on progressing higher and higher. Yeah, I had that pullback there. But yeah, this was definitely a no play in the sense of there just simply wasn't a pullback. I mean, this monster just kept on being a monster and went up just slightly up above $9. So yeah, in hindsight, it would have been best to just say, hey, yeah, just buy it on the open of Monday and then, sell it a couple of days later. But unfortunately, there's no such thing as hindsight. So this was a situation where, yeah, there was an alert made And, I just got it wrong. It never pulled back at all. In fact, like I said, did the exact opposite, gapped up, and then just continued to run. So none of one of these were just simply no action would have been taken, assuming, of course, you were, following the philosophy of the alert. Now, for other people, I mean, perhaps they made another trade out of this because it was, a profitable move. But as far as what I alerted, yeah, in just being transparent and keeping things, in good faith, yeah, there just wasn't anything, that could have been taken advantage of because that thing just never pulled back. So keep in mind, we've talked about a couple of sub, $5 stocks. Now we're talking about one that's sitting there right at the $10 area. So price range is, getting a good variety, and that'll change even more as we go. But here we have FTCH looking for a dead cat bounce. So big volume and just a matter of, can the price break through the $11 mark? So let's see how this one played out. So there was the chart going into the new week. So let's see how this one turned out. Got the break up above 11 right there. And then right there just kept on going. And one of those where, yeah, that move right there, although it doesn't look huge, that was actually good for 12.9% in only 2 days. So let's just assume, and you can see here, an example, though, of one that things are looking so good, and then back down, it kind of just rolled right back over. Nothing drastic, but I'm sure you've been there before where you get into a position, and sure, it's a winning trade, so it's not a matter of, oh, great, I lost money. It's, yeah, I got money, but it's also one where like, ow, things are looking so much better. But, it happens to everybody where you're in those sorts of situations, and then they kind of just fizzle out. You still make money, but not maybe as much money as you thought you were going to make. But point being on this one, let's just say you screwed up half the trade and only got 6% out of it. So think about those numbers again, 2.5% for 1 year or 6% in 2 days. I can only speak for myself, but I'm going to go with the 6% in 2 days. These next ones we're going to cover are from those people that have taken my classes, and the reason why there are no pictures is because those people have taken the classes, so they have the knowledge, they know what they need to do, and this is just helping them out with the ticker symbol. So it's assuming everybody knows how to fish, but then this is just my way of saying, hey, there might be some fish over in that area of the pond. So that's all I need is, hey, kind of a heads up, but they know where to take that information and what to do with it. So that's why there's only ticker symbols here. But the first ones we're going to look at is shorting for profit setups, and shorting just means making money when prices go down. And yes, if you're new to the market, that is possible. You can make money on a stock if that stock price actually goes down, and that's what shorting is actually all about. So we're going to take a look at them. MDT here was either a no play or a small loss, depending on how you would have looked at it. But let's first take a look at STAY. As a friendly reminder, remember, we want to see prices go down. If prices go down, that is a good thing. So let's see how this one played out. Then you can see really started to pull back there. A little bit of a fake bounce there. And then down it went that much more. And that move was good for 7.9% in about a couple of weeks. So we'll call it 8%. And again, let's assume that you screwed up half the trade, so you walked away with 4%. Sure, is 4% huge? It's not massive, but let's keep things in context. 4% in 2 weeks or 2.5% in 1 year. Once more, I can only speak for myself, but I'm gonna take that 4% in 2 weeks all the time. And once more, that does assume that you screwed up half the trade. I mean, what happens if you got 6 or 7% out of it? 7% in 2 weeks compared to 2.5% in 1 year? No-brainer decision. We're now going to take a look here at PVG. So here's the chart going into the weekend. Opening day of the week, got another very favorable candle right there. And then you can see that candle started to come to fruition as things looked top heavy, and then did indeed start to pull back and pull back that much more before starting to recover. But that movement right there, good for 10.8%. And let's see, 1, 2, 3, 4, 5. So a day and so 1 week and a day. So 6 days total, 10.8%. Once again, let's just say that you screwed up half the trade, so you got 5% out of it. 5% for basically 6 days or 2.5% for 1 year. I know which one I'm picking, but another great example of making money when prices go down, and how sure these movements aren't massive, but you know what? Looking at things in a very practical sense, it's definitely worth the time and worth the effort, to take advantage of these sorts of opportunities. And then finally, we're going to come up here to the trampoline trading setups and focus here on OAS. So let's see how OAS played out. As far as these other two, If I remember right, one of these was just a small, modest loser, and then one of them just never really had any buy signals, so it was a matter of just kind of a no play. There was no action to be taken. But let's look at OAS. So again, keep in mind we were just looking at stocks that were up above $15, and now we're back to something that's below $3. So like I said, price ranges all over the place. But let's see how this one played out. So got some nice little movement there. Modest little pullback, nothing big. And I should note that my calculations are not being taken from assuming that somebody got in like at the perfect spot right there. So no, I'm not running the numbers based off that. That'd be a little bit, not a little bit. That would be manipulating things and like assuming the absolute best case. So that's not how these numbers are working. Point being though, from there it started to recover and then really made a nice jump and then continued to make a nice jump. And that move right there was good for 23.4%. And basically, we'll call it 2 weeks. So again, let's say you screwed up half the trade. I mean, that's 11.5%. 11.5% in 2 weeks. 11.5%, 2 weeks, or 2.5% in 1 year. I know which one I'm taking. But I do also like this one because it's a good example of kind of how the market can be cruel at times. So yeah, that was a great move. Don't get me wrong. But then yeah, a deep pullback right there. No doubt about it. Pulled all the way back down there. So I would assume that would take most people out of the trade. And then it does this, where it just booms back to the upside and hits almost $5, which would added quite a bit more onto that percentage. But you know what? That's just how the market works sometimes. It gives you a nice little gain and then pulls one of these fake type movements where it acts like it's getting bearish again and then just rips back to the upside. But it is what it is. Like I said, that's just part of trading, and it doesn't mean you're a bad trader if it happens to you. It just means that you're a trader in the market because it happens to everybody. But overall, again, nice solid week, good solid moves. Yes, nothing monster like there's been in some of these past videos that I've done. But yeah, you can't have 50, 60, 70, 100% gains every single week. That's just not realistic. But like I said, 2.5% or 1 year, I'm definitely going to take these gains that you saw here in this review. If you are interested in joining the community and getting these alerts, then just go to claytrader.com/team. The other thing to keep in mind is that the newsletter that we went over here is just half of it. The other half is a live chat room where you can stay in touch with me and other good solid traders. And that's open 24/7, so almost around-the-clock discussions going on, and then lots of alerts during the day. And there's also a mobile app that comes with everything. That way, it's not like you have to stay chained to your computer or anything like that. You can stay in touch no matter where you are. And as far as the investment pricing, and I say investment because the key thing you need to ask yourself with that right there is, do I believe that if I invest $99 to join the community, can the community make me and help me make me more than $8.25, not per day, but per week? If you think the service can help you make you more than $8.25 per week, then that is definitely what you would want to do. You will get a good return on your investment. So that's kind of the thought process of how to go through all that. $8.25 per week. If you think the service can make you more than that, then yeah, sign up and I will see you in the side. If there are any other questions, you can leave those down in the comment section below or just reach out to me through the site. I'd be happy to help. But yeah, good solid week. Very happy with it. And in the coming weeks, spoiler alert, there's going to be some much bigger percentages, but like I said, you can't have those all the time. But overall, solid results.